All right, if you work in nonprofit finance, you know this feeling. You're using this powerful accounting software, but when it comes to managing restricted funds, it feels like you're trying to fit a square peg in a round hole. Well, today we are going to fix that. So picture this. You're the finance director at Hope Springs Community Health Center. It's the first day of the annual audit, and your auditor leads with this exact question. Now, on the surface, it seems simple enough. But for so many of us, that question triggers a little bit of a cold sweat as we open up QuickBooks and just pray we can find a clear answer. And that's really the big question, isn't it? If we're being honest, for most nonprofits using standard accounting software, the answer is, well, it's not easily. You know the information is in there somewhere, but it's buried, it's all mixed together, and it's going to take a week of spreadsheet gymnastics just to prove you're in compliance. But here's the thing, and this is really important. This is not your fault. It doesn't mean you set things up wrong. The problem is actually a fundamental mismatch between what that software was originally designed to do and what your nonprofit desperately needs it to do. Let's dig into that fatal flaw right now. This gets to the absolute heart of the issue. See, QuickBooks was brilliantly engineered to answer the question on the left. Did we make a profit? It's all about that bottom line. But in our world, in the nonprofit world, our number one financial question is totally different. It's, did we honor our restrictions? And QuickBooks, right out of the box, just wasn't built to answer that. So to solve this, we don't actually need to buy brand new, expensive software. What we need is a new way of seeing our organization's finances. It's kind of like a paradigm shift that'll finally align our accounting with our actual mission. Okay, so the very first step in this new way of thinking is to realize that your nonprofit, it isn't just one single thing. And it definitely doesn't have just one big, murky pool of money. I mean, thinking of it that way is what causes all the headaches and the compliance nightmares. When all the grants and the donations are just dumped into the same bucket, it's impossible to tell which dollar is supposed to do what. The solution, the real fix, is a beautiful concept called fund accounting. This system just flips the whole script. It makes you see your organization not as one entity, but as a collection of separate little buckets or funds. Each one of those funds has its own specific job, its own set of rules, and its own balance. And here's what that looks like in the real world. Suddenly, Hope Springs Community Health Center isn't just one organization. It's a whole portfolio of funds. You've got your federal mental health fund, your state diabetes fund, your flexible general operating fund, and so on. Each one of these is its own little financial worlds that we have to track. Now, this all sounds great in theory, right? But the question is, how do we actually build these separate funds inside a program that wasn't made for them? How do we engineer this new way of seeing things? And here is the best part. The tool you need to do all of this, it's already in QuickBooks. You don't have to buy a single new thing. It's this powerful and often really underused feature called classes. And that, my friends, is the key that unlocks everything. Here's the blueprint. This is exactly how you set it up. You create these big, top-level parent classes for your main categories: unrestricted, temporarily restricted, and permanently restricted. And then each individual grant or fund, that becomes its own subclass. You're basically building a structure that mirrors your funding reality right inside the software. Okay, now I want you to pay very close attention because this next part is the absolute key to making this entire system work. Your normal chart of accounts, salaries, rent, supplies, that still does what it's always done. It tells you what you spent your money on. And here's the magic. The classes we just created, they tell you which fund paid for that expense. Let me say that again because it's so important. Accounts tell you what, and classes tell you which. So when you pay a salary, the account is salaries, and the class is federal mental health grant. All of a sudden, every single transaction tells a complete story. So what happens when you put this all into practice? Well, you move from that total chaos of a single pool of money to the crystal clear clarity of fund-based reporting. And this is the payoff. Remember that auditor's question from the beginning of our story? With this system in place, you don't even break a sweat. You just run a budget versus actual report, and you filter it by one single class, the federal mental health grant class. And boom, in seconds, you've got a report that proves exactly how much is spent, on what, and that you are perfectly on track. You see, ultimately, this isn't just some clever accounting trick. This is about fundamentally strengthening your organization's ability to actually achieve its mission. Because when you manage your funds this way, you're doing so much more than just passing an audit. You are honoring the incredible trust your funders put in you. You're protecting your tax-exempt status, you're avoiding those dreaded grant clawbacks, and you're making confident decisions because you can finally tell a clear, powerful story of your impact, and you've got the solid numbers to back it up. It all really boils down to this. Good fund accounting is a core part of nonprofit stewardship. It's the financial backbone that allows your mission to truly thrive, protecting it from risk and ensuring that it's healthy for the long term. So, as we wrap up here, I want you to think about your own financial reports. Every single number in there tells a story. By structuring your accounting this way, you ensure that your numbers are telling a story of integrity, of accountability, and of incredible impact. So the only question left is, what story will yours tell?